Good morning, everybody. Everyone, welcome to our Wednesday morning meeting. We do these morning meetings every day of the week for our Armor Investing Way. This is our virtual hedge fund. I respectfully request, if you're watching this video, you think of yourself as a portfolio manager on a hedge fund desk. I'm going to share with you our strategy. I'm going to share with you our algorithms. I'm going to share with you information we're using to make money on this desk. And at the end of the day, you've got to think for yourself. What's your risk tolerance? What are your goals? Execute your strategy. Only you can be the smart money of your own assets. So today, let's go over our risk monitor. The risk monitor drives all of our risk decisions on this desk. 8 out of 10 stocks follow the market. We have 10 algorithms written for the volatility of 10 assets that drive this risk decision. We have a portfolio we call ARMR Macro. All we do in that portfolio is own indexes or pieces of these 10 positions. Okay, so we look at the market first. If the risk monitor is yellow or green, we're adding risk. If the risk monitor is red, we're taking risk off. So to get you caught up, risk monitor went red 3 weeks ago. We were protecting capital, raising cash. And I said to you at the time, that's not a call for a bear market. What I expected was a 4 to 7 week tight formation that would then launch the market into a year-end markup market. When you have a big year in the market, generally those assets get marked up by institutions and analysts in the last couple months of the year. Generally, right? There can always be something that goes wrong that changes that, but that's the base case scenario. So we had a 6-week consolidation. Last week on Friday, the risk monitor went yellow. And I said to you guys, it was yellow with a greenish hue, okay? Because everything looked like, here we go, the beginning of the markup. So what happens when we go yellow with a greenish hue? We start adding risk in the portfolio. And what I submitted to you last Friday is that I want to add risk in the assets I think are going to get marked up into the end of the year. Now, there's many different ways to play this. But for me, that means the AI data center stocks and all the satellites around it that make that story go. So we're going to get to top stocks to watch, top stocks to buy in our portfolio. I'm going to share those with you in a minute. But before I do, quick programming note, a couple of things to remind you of. Today is Fed Day. One reason we're not full on green yet. What does that mean, not full on green? We still have about 25% cash in our flagship fund, okay? So not a lot of cash, but we got some cash. We got to figure out where we want to put that cash if we get full on green by the end of the week. In order to get full on green, I needed 2 things. I got to get past Fed Day, which is today. Everybody and his brother and his grandmother and everybody he knows is expecting the Fed to cut 25 basis points today and stop quantitative tightening. I hate it when everyone's on the same side of the boat. I'm on that side of the boat too. I think the Fed's going to do that also. Will Chairman Powell throw a curveball? He hasn't thrown a curveball, I don't think, in his entire life. You know, it's always like some kind of 80-mile-an-hour floater right down the middle of the plate. Right? What's he going to say? We're going to cut 25. We're going to look at the data, blah, 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 blah. Maybe inflation, maybe unemployment. We don't know. We're going to watch. Maybe we'll cut it again. I mean, that's what he always says. So that's the base case scenario. If we get past that, that's one piece of the puzzle falls into place. So what I'm looking for is nothing strange out of the Fed meeting today. Fed Day protocol. I don't trade in the morning on Fed Day. I don't change my portfolio. I don't let If a stock gets touched, I don't sell anything. If a stock's breaking out, I don't buy anything. I'm not even on the desk until 1:30. I'm having this conversation with you. Then I'm going to go have a nice morning, probably walk the beach with my wife and relax. I don't care what the market's doing. Then 1:30, I'm on the desk. All Armor insiders, you can join me. We'll have the live stream going 1:30 to the close. Fed news hits the tape at 2 o'clock. I usually don't start trading until he starts speaking at 2:30. But every now and then we get a 2:15 trade going. So that's the schedule for today. I'll see you again for that live stream. By the way, guys, before we get to top stocks to watch and buy and that stuff, remember every Wednesday I have this conversation with you and I share it with all on YouTube. If you're not subscribed to the YouTube channel by now, you're not going to get that update. So go subscribe right now. If you have any comments, anything you want me to go over, put it in the comments section right now and go ahead and smash the like button. Why not? Okay. So let's shift over now to we get past the day-to-day. The Fed pretty much even keel as expected. There are 3 of the 10 indexes that are yet to confirm risk monitor green. Now, sometimes we'll go green anyway. 7 out of 10 is good enough. Here are the 3 that aren't confirming yet. And probably the one that bothers me the most is the equal weighted S&P. The equally weighted S&P, I'd like to see this thing make it a new high with the weighted S&P, right? So the weighted S&P is blowing out. Equally weighted, not so much. I'm not really surprised because my thesis here is that the biggest, best, most successful names are going to get marked up to the end of the year. That's the hateful 8 names. That's the data center names. So I expect the weighted index to outperform equally weighted, but I'd like to see the equally weighted, end up this week at a new high on the week. That would really confirm things, and I would be very comfortable with risk monitor green. Small cap index. I actually took small caps off today, yesterday or the day before. We put the position on. We actually booked a small profit in the small caps, but I don't like, oops, I should take this off here because it's not red now. I don't like the way small caps are behaving. And again, I don't expect small caps to lead in the next couple of months. So I want to focus my attention on big caps. I've got some cash in the macro fund. In the macro fund, I use double the indexes and triple the indexes. So we're long triple the S&P right now, double the S&P right now, double the NASDAQ 100, double the Dow. And I've got some cash, but I got to figure out what I'm going to do with that cash. It might surprise you what I'm going to do. I'm going to share with you in a minute the top stocks to watch right at the top of my whiteboard. It's a position you know and love. We're going to go over that in a minute. And I might add some of those ETFs to the macro fund. So I either increase the exposure to the big 3, Dow, S&P, NASDAQ, or I use that cash for this one group. I'm going to go over that in a minute. Okay. But so small caps, equally weighted S&P. The mid caps don't look good. Now, in all fairness, the mid caps are not one of the 10. This is not one of the 10 indexes I use in the risk monitor. Okay. But I do look at the mid caps and they're not confirming either. And then the last issue I have is Bitcoin. Now, Bitcoin is one of the 10 in the risk monitor. And the market's blowing out and Bitcoin's down here. It's not that the market can't keep going up with Bitcoin without Bitcoin, but it's just odd. I mean, Bitcoin has for a long time been the risk on asset. It leads risk on. And right now it's lagging. So these are the reasons why the risk monitor is still yellow. But if we get to the end of this week and everything else is strong and we're past the Fed meeting, okay, risk monitor will be green, even if these guys are lagging. But I wanted you to understand why we're still yellow with a greenish hue, meaning we're carrying some cash right now. All right. Before I get to top stocks to watch, top stocks to buy, Wednesdays, every Wednesday, what I'm sharing with you is an Armor Investing Way chapter of an upcoming book that I'm writing. You can go find these Armor Investing Way videos on our YouTube channel. I've got a playlist for you, so you can see each one, which is eventually going to develop into the book. I'm already putting the book together for you. Okay. So when we get done with these Armor Investing Way education discussions every Wednesday, I'm going to put together the book for you so you can have it as a reference guide of how to manage money in any environment. And I'm going to call it, the title of my book is Read and React, Stock Market Investing Guide in Every Environment. So today's discussion, the Armor Investing Way, is going to center on the top 5 technical chart patterns that I love and have helped me uncover successful investments over the 35 plus years I've been doing this. There's 5 technical chart patterns, price chart patterns, that I believe are the most important when identifying new investment opportunities. So let's go over the top 5 right now. I'm going to share chart patterns with you right now of stocks that are in our portfolio that represent these 5. Okay. So, but before I dive in, let me remind you of what is the importance. What's the importance of technical chart patterns? In fact, why don't we start with NVIDIA? Okay. We're going to start with NVIDIA. But what's the importance? What is technical analysis? Because I think some people are going to tell you, it's voodoo. It's, looking at a crystal ball. It's reading tea leaves. They're wrong. They just don't understand what technical analysis is. So let me lay it out for you simply. Technical analysis is the understanding of the battle going on between buyers and sellers. It's a war. There's a war going on between buyers and sellers. Each side has ammunition. At some point, they meet on the battlefield at a certain price, a line in the sand, and they do battle. When one side wins, price discovery explodes in that direction. That's what technical analysis is. So we do our fundamental research, we build a whiteboard of stocks we want to own, and then we look for that battle. Where are the battle lines drawn? And when we get the move we want, you make the investment. So let's start with the highlighted stock of the day today, which is NVIDIA. Now, NVIDIA is the highlighted stock of the day. The keynote speech yesterday by the CEO was just absolutely brilliant. We listened to it on our trading desk yesterday. I suggest everybody go listen to that keynote speech from the CEO of NVIDIA. And guys, if you missed it in the Slack room, I posted it for you in the Slack room. So you can just click on the link and watch the replay. It's essential to understanding why on this desk we're focused on AI and data centers, and why on this desk, looking at this chart pattern, which is one of my favorite. I said to you yesterday as it was happening, it would be a dereliction, a duty for a portfolio manager not to own NVIDIA, at least from here to the end of the year, as they mark up portfolios, but probably longer, okay? Especially when you dovetail that speech with this chart pattern. So let's go over top 5 chart patterns for the Armor Investing Way. The first is going to be, and in no particular order, all right, I love them all equally, but the first, as we look at NVIDIA, is going to be the 5-wave rectangle. This is a classic example of a 5-wave rectangle. So stock goes through any type of advance. You can see if I go back here, obviously a huge move higher in NVIDIA, and then it went through a basing process. You get a rectangle. You connect the highs, the lows, and you see 5 waves in the tangle. 1 up, 2 down, 3 up, 4 down, 5 up and out. That's what's happening right now in NVIDIA. And it gets the fifth move, blows out, consolidates, and then you have the follow-on opportunity. So originally we put a position on down here at the start of wave 5 up, and then you can add positions here. You might trade it. We traded it in here, okay? But now the idea is to be long after it consolidates that breakout. See, the fifth wave up and out, you don't know it's 5 up and out until it breaks out, right? Then it consolidates the breakout. The 50-day moving average comes up to it, and now the real move begins off of this base. Side note, when it comes to technical analysis, if you're trying to understand targets, now I don't come up with targets of how high I think something can go because I'm going to sell it. I don't do that. At a target, I usually book some gain, but then I use trail stops the rest of the way. Go look at the playlist on YouTube about the Armor Investing Way. Last week, I had a whole conversation with you about stops and targets, so you can go over that. But the key here for a technical analyst is that generally, this is generally speaking, you want to take the width of the move of consolidation and turn it on its axis vertically. So you take the horizontal width of the move of consolidation and turn it vertically to give you an idea of how high price can go before this base breakout's over, okay? So weekly charts are more compelling than daily. This is a huge base. Turn it on its axis. There's a lot of upside left in NVIDIA. Let's move on. My second, and again, not in any order, I love all of these equally, but let's go look at the pennant formation unfolding in Tesla right now. This is a weekly chart of Tesla. By the way, these are stocks to buy, stocks to watch. Okay, so kind of watching them at the same time. We own these stocks in the portfolio right now. This chart here of Tesla is one of my favorite patterns, and especially on a weekly level. So you have a big move up, and then you have a pennant formation. The big move up, think about it. That's like the stick. The pennant is the flag. When you break out of the top of that, price discovery is dramatically higher. That's the pennant formation. We could drill down into another example of a pennant formation on a smaller level. And this is called the high tight pennant, which I absolutely love. We're going to look at SanDisk a lot because we have a bunch of different pennants, a bunch of different formations here. But the high tight pennant is another explosive chart pattern. So here's SanDisk. It blew out, set up a high tight pennant, and broke out again. And I said to you guys on this day, on the 15th, we could buy more SanDisk if we want right here as it's breaking a high tight pennant. Stock was trading somewhere around 140 and change. It blew out to around 190. So you have smaller daily high tight pennants, and you have bigger weekly pennants that can form. Obviously, the bigger weekly pennant has more legs. When the breakout begins, you take the width of the base and turn it on its axis. Something big is coming for Tesla. We're not talking about fundamentals right now. We're just talking about technicals, okay? Let's move on to the next chart pattern. We're going to call it the bottoming wedge, and we're going to look at SanDisk again. We bought SanDisk 47.87 on the 27th of August. Stock right now is trading somewhere in the 180s. And the main reason we were doing it is this chart pattern right here. Okay, this is one of my favorite patterns. Now, it happened to occur on a new issue. SanDisk was a spinoff, but this is a bottoming wedge. You could see it's almost like a pennant formation without the stick, right? It's just the flag formation or wedge. And when you break out of the wedge formation, you get long. And then, of course, sometimes you catch something like SanDisk. Okay, another example of a bottoming wedge. Let's go look at BTU. We recently owned Peabody. So a bottoming wedge, the stock sells off for 6 to 12 months, sometimes more, then sets up the bottoming wedge. In other words, the lows begin to rally. So you have higher lows. That's what makes the wedge. And you could draw the line in the sand where the battle's being done. The sellers keep coming in at the same price, but the buyers get more and more and more aggressive. When they break that line in the sand and the buyers win that battle, they have more ammunition than the sellers do. And you can get a move like this, where we're long at, somewhere around 16 and change on BTU, and the stock blew out to 36. So that's your bottoming wedge. You've looked at the rectangle. Here's another example of the rectangle. Here's Pure Storage. Pure Storage. 1, 2, 3, 4, 5 up and out. This was an up and out gap up, and you can still buy it up here on the gap up. That's how powerful these rectangles are. And we'll finish off with the reverse head and shoulders. On another day, I might share with you guys short chart patterns, but I'm not doing that today. This is long only, 5 chart patterns to know and love. And the last one is the reverse head and shoulder. Oh, wait, there's 2 more. The reverse head and shoulder and the cup and handle. All right. So the reverse head and shoulder, there's a movement of price here. That's the shoulder. It breaks down and makes the head. It makes another shoulder when it comes up to that line in the sand where the battle's being fought. And then the breakout. This is VRT. We own it in the portfolio right there as it broke out. That's a reverse head and shoulders. And then we'll wrap up with probably the technical chart pattern most people are familiar with. And that's going to be the cup and handle. Okay? The cup and handle, everybody's heard of the cup and handle. The cup and handle looks like this. Price high, then a nice big cup of price pullback, right? Then it makes its way back up towards the high, so there's the whole cupping formation or saucer. A saucer would not have a handle. It would just be rounded bottom straight out. Sometimes that happens. But my favorite pattern is the cup, then the pullback, which is the handle, and you buy the breakout, which is that green box in here. This is Snowflake. It's a stock we own in the portfolio right now. The cup and handle. And I'll give you one more example of a cup and handle on a smaller level, and that's going to be IBM recently. Okay? You could see the cup and handle formed in IBM. And I'll just show you with a formation like this. There's the cup. Cup's coming like this. Okay. The handle's the pullback. Sometimes it's a small, tight pullback. You're buying that green box. It blows out. There's the cup and handle breakout in IBM. So there are the 5 chart patterns that are most important on my trading desk. I build my whiteboard of fundamental ideas, then I look for these 5 patterns, and when I find them, that's where I go when I want to make investments. And of course, we use ARMR algorithms to find the buy trigger. That's the ARMR investing way. Now to wrap up today before the bell rings, I want to share with you one group that's at the very top of my stocks to watch. I promised I would. I said to you, I've got about 25% cash in the flagship fund. I've got about 25% cash in the macro fund. Where am I going to put the money? Risk monitor goes green. I can increase the size of all of the investments in the portfolio if I want. Or I can take this 25% for the following group. And here it is. Gold, silver, and the mining stocks. I got a question for you. Be honest. 6 days ago, were you a wild bull in gold and silver? Did you think they were the greatest things ever 6 days ago? Now we've had major price volatility down to the 50-day moving average, which we knew was going to happen. On this desk, I shared with you on this day, in fact, in the pre-market on the 21st, I shared with you guys in the Slack room, all Armor Insiders, I said, I'm selling every precious metal stock in the portfolio, and I'm reducing my gold position to its minor size, physical gold. So all I own is a small position in physical gold. And I told you that pre-market on the 21st. And the simple reason was absolute levitation, skyrocket, 3 standard deviations above the 200-day moving average. These stocks are priced to perfection, and I want to be in a position to buy weakness instead of getting blown out by weakness. And then, it's very hard to make decisions. Okay? 6 days, 4, 5, 6 days, 7 days from the high. You're looking at physical gold, physical silver, SIL, GDX, the ETFs of silver and gold miners, okay? What do you see there? They've all come right down to the black line, which is the 50-day moving average, right on top of the previous base, sitting right above the stops. They're right above the stops. I love putting positions on close to the stop. Look, if these things close the week below those red lines, I don't want to own them. If they close the week above those red lines, I'm going to want to begin repositioning these assets. Did you love these assets when they were trading a lot higher 7 days ago? What changed in the fundamentals? Be careful. Are you just a momentum guy? You thought they were great because they were skyrocketing. They sell off for 7 days. It's the end. So many people are coming out of the woodwork calling the end of precious metals. Most of those people missed the entire move. Okay. So put their opinions over here. If you miss the entire move up on the metals, you don't have a say in when the move is over. Okay. Just sit over here. Keep watching on the sidelines. The rest of us who've been banking out on precious metals are going to continue to execute on the fundamental thesis until the stops are taken out on a weekly level for the long-term uptrend. That hasn't happened yet. Instead, they've come right down to a buy zone. I'm looking for reversal patterns. I'm looking for the Armor Algo buy trigger. I'm looking for weekly closes. I'll probably put some of my capital to work close to the 50-day. Looks like they're going to gap up a little bit this morning. Gold's up about 1%, 1.5%. Silver's up about 2%, 2.5%. We'll get past the Fed meeting today. I may begin putting some capital to work today in those positions, and then I would finish it off probably by the end of the week. If these stop prices are holding and the Armor Algos are giving me a buy trigger. What, all of a sudden China and the U.S. are going to play nice? You don't have to worry about the U.S. dollar move away, right? The renminbi and all the things they're trying to do. So we had a peak move in metals when everyone was afraid of Trump and China and tariffs. Now there's some type of agreement. Metals have come off dramatically. What do we think? All of a sudden, everyone's going to play nice? Oh, wait, maybe you think the Fed's going to raise rates today and double quantitative tightening. You see what I'm getting at? The Fed's cutting rates and ending quantitative tightening. It's a perfect storm for precious metals and a necessary shakeout after an unsustainable explosion higher. That's the bell ringing. I will see all of you, Armor Insiders, 1:30 for the live stream. Otherwise, I'm off the desk this morning. Everybody else, you got any questions, comments? I'm happy to answer them. couple of thoughts. What do you got here for me? I'll answer them right now. Oh, yeah, Ivy League's talking about, oh, so you must have watched the NVIDIA keynote. It was just brilliant, right? And now, Ivy, everybody, his brother's coming out, upgrading the stock. I mean, the beginning of the markup of NVIDIA and everything in the data center, it's all happening right now. Look, guys, if everything crashes by the end of the week because the Fed does something stupid, I'll have to raise cash, okay? But assuming that we continue to get confirmation of the risk monitor change and it turns green, these stocks are just a no-brainer. So across the board, there's a year-end rally. Oh, thanks. I appreciate that. Thanks. I appreciate those comments, Ivy. All right, guys, listen. 1:30 Armor Insiders will be trading the Fed announcement. Everybody else, you're on your own. I wish you nothing but success. Don't forget to subscribe to the channel. Every Wednesday, I'll be having this conversation with all of you. So if you have questions along the way during the week, jot them down, throw them into the comment section. I'm happy to go over it with you. At the end of the day, whatever I've said, whatever you hear somewhere else, go find a quiet place, figure out your strategy, risk tolerance goals, execute that, and be the smart one.